For section 2.3, we're going to be analyzing revenue, expense, and withdrawal transactions into debit and credit parts. Our directions state that we are to use the chart of accounts for Burgum Services from Work Together 2.2. On April 10th, we received cash from sales $600. First thing we need to do is identify which two accounts are affected. We know one account is going to be cash and the other is going to be sales. Our asset account cash is increased, and also our owner's equity account increases. Since sales is a revenue account and our revenue increases our owner's equity, we know that both those are going to be going up. So first things first, we're going to put our cash title here and our sales title here, increasing by $600 on the asset side and on the revenue. On April 11th, we sold services on account to Sam Erickson for $850. We need to identify our two accounts again, which are accounts receivable Sam Erickson and our sales account. I'm going to put those in here. Now, since accounts receivable Sam Erickson is an asset account, sales is our revenue account, which affects owner's equity. Assets increase on the debit side, therefore we're going to debit right here on the left side, $850 for Sam Erickson. Owner's equity increases on the credit side, so that's going to be the right side. So our credit side of our sales is going to be increasing by $850 also. On April 14th, we paid cash for rent, $250. We know our two accounts are going to be rent expense and cash. So fill those in first. Rent expense is an expense account that affects owner's equity. Cash is our asset account. Owner's equity decreases from an increase in expenses and our assets decrease. Owner's equity accounts decrease on the debit side, which is an increase in expenses, decreases owner's equity. Expense accounts have normal debit balances, therefore debit the expense account rent expense. So we're going to debit that right here for $250. Assets also decrease, and since cash is our asset, it belongs on the right side. So that's going to be going down $250. Moving on to April 18th, we received cash on account from Sam Erickson, $425. Cash and Sam Erickson are our two accounts. I'm going to put those in here first. Let's see about Sam Erickson. Cash is an asset account, and so is Sam Erickson. Therefore, we're trading one asset for another. Since we're receiving cash from Sam Erickson, our cash account is going up by $425, and our other asset is decreasing by $425. So you traded one off, so left side and right side for that asset accounts. And the last one, on April 20th, we paid cash to owner for personal use. Two accounts affected this time are going to be our Kathy Burgum drawing account, drawing because we're taking money out, and our cash account. Kathy Burgum drawing is an owner's equity account, and cash is an asset account. Owner's equity decreases from an increase in withdrawals, and our asset, which is our cash, decreases. Owner's equity accounts decrease on the debit side, and increase in withdrawals decrease our owner's equity. So taking our money out is going to affect the left side of this equation, and our teacher is going to go $300 on the left, and our cash is going to go $300 on the right, which is a decrease to our assets. Now I know 2.3 has some tricky concepts in it for you, so be sure to look back at your charts if you need to, and watch this video a few times. If you need help, feel free to stop and ask me at any times. Good luck and try 2.3 on your own.